the Federal Reserve has increasingly over the last 40 years, and especially since 2008, driven all of the markets. In every market, it is price setting, it is pulling the levers on the economy to a degree that I think the Politburo in the old Soviet system would have wished they had this power. Fed actually sets the prices of everything in the U.S. economy, and by implication, everything in the world, because it's setting the price of money. So it is taking charge, and then they're surprised when things go awry. You know, they're surprised when these 10 or 12 very credentialed economists sitting in this room, when their decisions they're not omnipotent, and things don't go as they intended. I mean, these are the people that said inflation was transitory. and now they're saying, oh, you know, don't worry about the federal debt. We'll handle that another day. It's not any time. This isn't the time to do it. You know, the bottom line, Ivan, is that we have been in this process for over 4 decades. Right. The Fed constantly lowering interest rates in response to any kind of economic hiccup, then having to come up with all these programs and direct quantitative easing, direct injection of helicopter money into people's bank accounts post-COVID, more and more each time. So it's a 4-decade-old process. We're in the end game. That end game could go another 20 years. Who knows? Right. It could go only another 2 years. Nobody really knows. But we're in the end game of that process.
Well, Yellen just came out this week, and she said that inflation in 2023 will be a lot lower. So that tells you everything there.
I forget who said it, but they said, well, count on inflation, higher inflation in 2023, because it's like a number of other people that have been marked as, the ultimate contrarian indicator. She has no idea.
Mm-hmm. So, Brien, will the DXY continue to fall as the Fed slows down rate hikes, or a lot of people are saying they'll do a 50 basis point rate hike the next meeting? What if they come out and do a 75 basis rate hike? Will that last, or will it just be a short-term effect?
Yeah, we'll know real soon, won't we? But if they do come out with that, you'll see, precisely the opposite. You'll see the equity markets crash. You'll see, weirdly, you will see a reaction in precious metals downward. You'll see the dollar index soar if they come out with a 3/4 point. I think they don't want to deliver these kinds of surprises to the markets. I think that they are two things. I think they will do a 1/2 point because that's the consensus expectation. They don't want to deliver a body blow to the markets over the holidays. So they're not going to surprise them there. I think what they're trying to tell people, and you can see that through their pet Wall Street Journal reporter said last week how they're probably going to get the terminal rate on the Fed funds rate over 5% and leave it there for a while. I don't think they can do that, but they're trying to deliver that message to the markets that maybe a 1/2 point now, but don't doubt our perseverance here. We will keep rates high for an extended period of time until we see things really reverse and we've killed off inflation. I don't think, again, they'll be able to do that.
What are your thoughts, Brien, on the whole FTX fiasco? Do you believe people are now, after they see all the fraud and they don't actually own anything on these exchanges, do you think people are going to be shifting over from cryptos to precious metals?
Well, I think that happened. I think when you saw cryptos crash because of these frauds, you saw gold soar in response. So there were shifting of allocations shifted from one safe haven that was new and really hadn't been stress tested to one that is time tested and pretty much immune from the kind of frauds. I say immune. There have been lots of frauds in precious metals, but they've been the same sort that you saw with FTX, where you thought these people were holding your metals and they weren't. So that's a very relatively easy thing for precious metals holders to guard against. Just diversify, hold it in different places, hold it in your safekeeping. Longer term, I think that crypto will bounce back, but I think it's really going to be focused much more on Bitcoin, Ethereum, some of the ones, the dollar-based tokens, etc. I don't think you're going to see that kind of speculative fervor again, especially as it gets greater and greater under the regulatory umbrella.
Mm-hmm. Are you putting your money in anything other than silver and gold, like any other commodities?
You know, not so much. I'm a big copper bull. I'm a big bull on other base metals as well because of the the long-term supply demand trends, etc. The electrification issue. So I think that's a big story, and I'm playing that not by buying anything physical or in the futures markets, but the junior mining stock market, which is where we specialize in gold newsletter. And continuing to look for good stories in copper, good stories in base metals, some of which are really doing well right now for us. And in gold and silver, of course, because those are the primary monetary metals. Not very big into the PGMs. I think that they are much more industrial than they are precious or monetary. And they have good reasons. There are reasons to invest in those as well, but I don't have quite as many plays in that area.
So, Brian, Silver Institute, they came out this month and they claim that there's the biggest deficit in silver in decades, and Reuters reported on it. Do you believe this is significant, or have you heard this story before?
I've heard every story I'm imaginable over and over again over the last few decades. The issue with silver is that there were and still are huge above ground supplies. But they have been eaten away at over the years, and a annual supply deficit just means that right now current production can't keep up with supplies, and it's eating away at those above ground supplies. There are some signs of another silver squeeze in the making, but this one not so much driven by retail demand, which we've seen over and over again over the years, where mints, government mints, imagine that, aren't very good business people, and they can't meet surges in demand at the retail level. What really moves prices are the 1,000 bar levels, the big ETFs, etc. And there are some signs that market and the comex market are facing some stress points that may lead to a real silver squeeze that has lasting consequences. If we have a sustained rise in the silver price, and which would naturally be, I think, dependent on a sustained rise in gold,